Good morning, everyone. This is Anka Metcalf with Trade Out Loud, and this is your pre-market game plan for Friday. It is February 7, 2020, 8:35 a.m. Eastern Time. We just had the NFP numbers come out. More jobs were added, and very shallow reaction so far. So having the 4-hour charts. Yesterday, new high into the E-mini Dow, and currently pullback zone into this cluster. We still have support 29,108, which is a confluence zone. We saw the tail, the last tail, 29,108, and we have the high into the 29,307. The weekly is super strong. The weekly from the E-mini Dow came right into resistance and actually made a new peakable high, one of those periscope highs, and now it's pulling back. It's trying to do a daily rotation, and it has a tradable void to 29,000 from the daily chart. The 4-hour chart, like I said, we're still keeping the trend from this current move that we had within the past 3 trading sessions. So we had a huge 3-day rally, turnaround rally, and so far the price needs to find its own true support for the New York trading session. Now, typically we already have the game plan all ready, wrapped up, and ready to send to you guys. However, today, because of the NFP numbers, things are a little bit different. These numbers also always have a high impact for day traders, especially in the futures markets. And this is something that affects ETFs, the Qs, the SPYs, the diamonds, and also affects, obviously, the futures indices in a bigger way. Okay, so what we see going on right here, like I said, this is the 4-hour chart. We have the huge confluence area into the 29,100 zone. The reason why I have the 4-hour is because at 9 o'clock, I think in less than 20 minutes or a little over 20 minutes, it's 8:37 a.m. right now. We're going to have a brand new candle being generated here. So the game plan would be that if we trade above the 317 zone, the 317 to 314 to 317 to 320 level, this is going to be bullish, and we're gonna expect a further continuation higher with targets into the 29,360 and back to price advancement into the 29,405, 29,475, and we have further targets above. I will mention in the letter to you, and I'll actually post them today on Twitter because I have a speech engagement in Orlando at the Money Show. All right, so definitely the price is digesting the prior highs that were set right here back in January, the end of January, mid to the end of January. We had a huge consolidation, breakdown, this coronavirus again, and then the price went back up. So the line in the sand, I'm going to zoom in a little bit. First line in the sand would be over this 314 zone, and the second line in the sand would be the 368. We break above these levels, we're going to have a big rally to the upside. No doubt about it that we're going to start challenging the prior high. Now, remember that sometimes when we're witnessing massive rallies that are happening throughout the week, and especially tremendous rally, we almost rallied 500 points into the E-mini Dow. So whenever we see this kind of massive rally, it's usually kind of a distribution Friday, so traders are looking to take some profits back. Don't forget 11:30, the London session is going to close, and the environment may become a little bit more volatile and lower volume, obviously. So for long positions, definitely I'm looking for breaks above, obviously the first break over 314 to 320, like I mentioned, And the big go ahead is going to be over this pivot high into the 370s with continuation into the 400. For the short aspect, what I would look for is basically to see how we cluster here, because we're still holding on to the prior support from prior price action that is actually deriving from a week ago. So as long as that confluence zone is holding, we may still see a rotation here. So I don't want to get ahead of myself and start posting some shorts. Yesterday, you've noticed that we were only long, we didn't call any shorts. Also, the day before that is because I wanted to keep everybody on the same side of the trade onto the bullish side. So shorting was not an option yesterday. Was not an option the day before yesterday, and since we rotated from those from Monday actually. All right, so I will post some levels on Twitter onto the private feed, but literally if we break to me this would be the line in the sand right here, the 29,100. If we break the 29,100 or a little bit above that, we have another pivot into the 150. If we form any kind of weakness, and if we're not getting any rotations, 5-minute base, 15-minute base, then we could see price acceleration lower, test of 100, and then we can start sliding to the 29,000. And like I said, 29,000 is going to be that huge area of support, huge area of support right here into the 29,000. All right, so let's move on to the next indices. Also, the S&P, I'm just going to put the 4-hour briefly. 4-hour, if we trade over 33.45, we're going to go higher. And I'm going to set on alert here. If we break below this low of the 27 zone, not necessarily, this is support, confluence area as well. You see the 20 SMA as well lining up there. We may have some strong algo reaction into that zone. So we're just gonna have to see how how actually the candles are going to react going into 9 o'clock, and obviously into the New York trading session open. We had a fantastic week, huge gains for us, and so far I literally want to be very conservative coming into this Friday. So just because the market is open and it's just bouncing around, it doesn't mean that we could have a trade in it. So we have to evaluate all the odds. If we don't have any high odds trades, then we're not going to be calling any trades. All right, let's move to NASDAQ on the 4-hour. NASDAQ's a little bit stronger from the structure standpoint. If it trades over 63, so the level has been unchanged for the last 3 trading sessions. This is the 3rd trading session with that lid at 63. If this proves to break the 9,400 and the price stays below 9,400, there is a tradable void that can be filled all the way to 93.18. Russell on the 4-hour, also if it trades over 1680, this is going to be bullish for a continuation higher, and going into 84, 1684, 1687, 1690, 1693, that is 93 and 95, those being the highs. Also, Russell, keep in mind, pull back to the 20 SMA and into the prior cluster that we have been trading at the beginning of January. All right, so so far right now we are trading onto the 1670 zone. We're seeing some price trying to hold into this area. So careful as we're heading into the open. If we break below the 4-hour candles, we may start accelerating lower. So not by much because we don't have huge tradable voids, but this may trigger the beginning of a pullback. And we have to be aware of that. Gold is actually pushing a little bit higher and is trying to punch through the 75 zone. This is resistance. Now it depends on where this candle is going to close. And if it's going to close above the 50 SMA, then we're going to have more velocity into the 75 and then pushed back into the 84. I'm thinking that, you know, we're still trading into the daily directional bias from the daily rotation that we've had. Okay, I have a lot of lines on this chart, but look at a cleaner chart to see the pattern. So we have the pullback buy rotation. We traded over the first layer of resistance into the 70s, punching higher into the 75. I still have the swings in gold, so we're still positive on that, and we're still trying to fill the void into the 84. So all in all, what gold is doing, if you could see here, this is a bigger flag that can explode higher. And like I said, for a longer term, something that I'm looking to keep for a long term. So this is a core, it's not a swing. We can look for further targets even into the 17 and 1720. All right, last but not least, this is oil. Okay, and oil has been extremely choppy and extremely difficult to trade. I have stayed away from it most of last year and this year. And very difficult patterns. We have to trade. By the way, rig counts today at Baker Hughes rig counts today at 1 o'clock. So what I want to show you is that we're still trading on massive support right here from 2019. We also have support from 2017. So we're trading back to the 2017 levels right now. We had a low into the 49.36. You could see that the weekly is still not committing. If next week we're going to get a price rotation over 52, this is going to be encouraging. It may start with a 4-hour rotation. So the 4-hour, let me just give this a little bit of time so we can have a bigger technical image. But 52 is going to be the line in the sand. It's going to differentiate the bulls from the bears. So there's going to be price advancement over 52. And again, it continues to trade in really wide ranges. So careful if you decide to trade oil. So it has huge risk. If you have a small account, that may be a problem. All right, I'm going to just take a quick look at the bonds because we like to sometimes hedge the moves in the market with the bonds, and sometimes bonds are a little bit more obvious. It did happen. So yesterday in the trading room, we discussed about this candle that was forming at the beginning of the trading session yesterday. Was a doji, and at the end of the trading session, I mentioned that it has a really nice hammer. It is a hammer formation, and also it's trading right on support into the 160. And I mentioned that if it trades over today's high, it's going to have a nice advancement going into the 162 and 162.24. 162.24 is the target and for a continuation higher. Obviously, the move occurred overnight, so I am going to add a little bit more time here. Obviously I was sleeping, so I didn't take advantage of it, but definitely very nice rotation that triggered. This is the trigger right here. That extended the move in the overnight trading session. You could see the resistance points right here. We have the first resistance into the 162, 162.19 here, and we definitely have room to the 24 area before moving higher. So I would say, you know, just because we have a really nice formation here, you can look at bonds for a pullback buy. That may project the price higher, even sending it to this 163 and 164 zone. So very nice. And by the way, bonds are setting up for a nice monthly flag that if broken, so like I said, 165 is going to be that big pressure zone where you're going to see a little bit of price gyration. Bears are going to try to come in a little bit more. But if we trade above this high, we have a greater chance of expanding higher into the 170s, and that is longer term. So back to our shorter term trades here. I'm just going to put it on the 15-minute. All right. So on the 15-minute, price action was not as smooth, but we definitely had a nice confirmation bar that eliminated that whole number into the 160, into the 162, and started pushing higher right here into the 162 and started to push higher right into resistance. So the indices are still holding. There are not a lot of setups that are happening right now. So we have pretty much bullish bearish zones confirmed, but we don't have a lot of confirmation in terms of setups. So I'm just going to wait for about 5 minutes and then I'm going to release the trade ideas for today. Hope you all have a great weekend, and I'll see you guys back in action on Monday morning.